Robert Heffernan, Endotech Analytics, streaming live exclusively for Pareto token holders. This is Blockchain Vitals, your daily trading show all around crypto and blockchain assets. We are daily trading them and currently building an AI interface to combine all of our years of technical expertise along with the latest in AI data mining to bring an incredible platform for trading cryptos to the Pareto network. And you're going to need to own Pareto tokens to consume the content of Endotech and of all the other expert creators of content around actionable trading of blockchain assets. So it is Blockchain Vitals. That's the name of the show. And I've talked a lot about fractals. And what I mean by fractals is that the patterns repeat when we're charting, all right? The patterns repeat, and without a reference of time, you don't know what that chart is because one chart looks like the next, whether it be a daily, an hourly, a weekly. I know I've mentioned before that I even saw a chart in tenths or 50ths of seconds of something being traded on the CME, maybe the S&Ps. And that chart, because of the high-speed algo trading, but you know what? The chart looked like any other chart. But the time frame was in tenths or hundredths of seconds. I forget which. To really confirm in my mind that the fractal thing really is something and the patterns do repeat. And you can use that to your advantage. And why is that important? Well, do you know what today is? Well, today is tomorrow already in Asia. All right. Good morning to all the folks in Asia, because in Asia it's already March 1st. And that's another fractal. The monthly chart has flipped, and there's information from that monthly chart. Honestly, some of these things haven't been around long enough for a monthly chart to build, but some of them have, and I'm going to be talking about Bitcoin in particular when I take the vitals. But first, let's do the rounds. Doing the rounds is a segment we do every day, talking things in the news, in crypto and blockchain land. And the things that jumped out to me today were two things. One, the SEC with lots of subpoenas and a stepped up effort to rein in the scammers in the space. And I highly applaud it. And, I spent 25 years on the floor, 25 plus years on the floor of the Chicago Mercantile Exchange, NFA registered. I love the fact that I spent that long a time on the floor and never had a ding against me with the NFA. Regulation is important, and there's bad players out there. And you need some regulation to make sure that they don't screw it up for everybody else that are really trying to do and create awesome things and be professionals in the space. So I was very happy to see that. I welcome the SEC cracking down on scammers, and I got to tell you, there is some transparency to this ICO market, and if you did an ICO strictly to scam people's money, there's a fairly big paper trail to your front door. So I would be worried if I was somebody that did that avenue. The other thing was the Montana legislature working through legislation in Montana. Very friendly to blockchain technology, especially towards utility tokens. And so I applaud Montana in taking the lead as far as the states are concerned to preempt the federal government from making an opinion on how this stuff should be legislated. A lot of times the federal government can and should and has taken its cue from what state legislatures have done, what has worked on a state level on the ground. And I just think that's awesome that Montana has taken the lead and is putting together legislation to protect blockchain utility tokens. Again, I'll say that again, utility tokens, things that are not securities. And let's figure this out at the state level and let the Securities and Exchange Commission, for sure, when they see something that's an obvious security or an obvious scam, by all means step in. But I think it's awesome that Montana's taken the lead there. The other thing is live now at Pareto. I'm just going to share this into the chat. Is the ranking is available. So you can go to rank.pareto.network and see what your ranking is with your Pareto tokens. So how exciting is the technology starting to come together here, all right? This technology on Endotech's side, we will have a beta of our full AI interface and some of the functionality in the next several weeks. Pareto from the network side, the ranking and the waterfall are all starting to come together. So we're going to be able to hit the ground running here beginning of Q2 and really see how this ecosystem evolves, and I can't wait to be a part of that. So that is just awesome. All right, so with the news on the SEC, I'm not sure what the news was, but we're going to take the vitals here. And while this day started out very promising if you were a bull, it hasn't ended that way. And it's already tomorrow, as I said before, March 1 in Asia. So let's just go to Dash first. Dash just continues to disappoint. Value range 591 to 611 currently below the value range low, right? In lower momentum again, below the pivot. A lot of things working against Dash here from a blockchain vitals sheet standpoint. I don't own any Dash right now. I wanted to get in on a big break, and I still probably will. I'm looking more at that lower momentum collar level 511, and I actually step out to the daily or the weeklies, and now a new month. There's some levels on that also, and we will provide dailies, weeklies, monthlies as we evolve that AI interface from Endotech. Let's go to Ethereum. A little better in that, well, it's still above its lower momentum level, but right there at the low end of value, 853 to 873 is the value range. Below its pivot, basically below its value range, low. It's coming up. If it can trade into value, build some time and volume and value, you can see it fill out to 873, but you really need to get it back above the average there at 879 for this to have longer term health. Yeah, like I say, I mean, I was pretty stoked on this stuff really regaining momentum, but it just can't seem to. That one, and also let's go to Bitcoin. 10,359 last, again, below its value range low, and it traded up and into up momentum today, but just couldn't hold it. Now, I'm not sure if it was the SEC news that did it. You know what? At the end of the day, who cares? All right, who cares what the news was? The price action tells you whether any news or anything has a viable impact on whatever you're trading. So whatever it was, they could not hold that up momentum level. I really wanted to see Bitcoin close in that up momentum level. Again, it seems to me that we're still in this congestion phase here. But a very interesting thing happened on the way to trading today. Well, very recently it turned to March 1st in Asia, all right? And so that monthly rolls, all right? And there's a few numbers. The monthly, how about this? The monthly up momentum level, monthly up momentum level in Bitcoin, 10,317. All right, right where we're trading. It's going to be interesting for me to see how this thing develops over the next couple of days, the rest of this week, see how the week closes, to see, you know, again, as a bull, you want to see it stay above that monthly momentum level, and you really want to see it gain that daily momentum above 10,734. Um, a couple other numbers on the monthly in Bitcoin. Monthly collar up at 18,885. The last several months it blew through the collars, but I find particular importance to levels where the previous month's high and the collar are coming in near the same place. So we made a high of 20,000. That was actually December. Forget what last month's low was. I don't want to go to the sheet right now, but it's going to get, if this thing does gain strength, right, and rallies, I think it's going to have a hard time this month blowing through and making substantial new highs through the collar and the previous monthly highs there. That's just my what I've noticed over the years, that penetration is going to be hard to do. The other thing here on a retracement now on the monthly, the average or the center line is $6,033. $6,033. Keep that in mind as just a fantastic level to enter on a washout down. I really love that level if things got goofy. And again, you can put orders in and just let them rest. And I said it the other day, you are unable on 100% of the orders that you don't put into the book. So you should have that in your mindset as a trader of these digital assets, especially in an electronic market. There's no running over to a pit where the noise is when it's making a low or a high. So you have to have orders resting in order to do that. All right. You know what I thought I'd do tonight too is go into a little bit more detail on trading the sheet, the Blockchain Vitals sheet. And to do that, some of you know the sheet is really 3 trading methodologies wrapped into one. And you would take these trading methodologies wrapped into one and apply it to everything else that you've learned and that makes sense to you and that you bring to the table as a trader. All right, so the very first thing I want to spend a little bit more time on, and I will cover one every day this week, one of these trading methodologies, is the value range, because I start every day first as a value range trader. And so let's just zoom in on that. All right. So value range trading. Value range trading is bell curve analysis, and it was first pioneered by Pete Stottlemyre at the Chicago Board of Trade back in the 70s. And Pete, his analysis, that the market is efficient, firstly, and that prices and volume distribute in a bell curve over time. And if you can do some bell curve analysis, then there's some patterning that shows up that helps you navigate the market. I mean, I think that's pretty much how it was. And there was many times that I actually saw guys building the market profile by hand. And this is what it would have looked like with somebody in the trading pit with a trading card that had prices there on the left-hand column, and then the letters are the 15-minute brackets that the particular asset traded that price, and you'll see bracket A, bracket B, bracket C, bracket D, bracket E, and this happened a lot, and that was the basis of it, that prices distribute in a bell curve. All right, and then further, that the value range is those prices that encompassed 70%, I think 70% of the volume. Then from his studying and from his expertise of trading, there was value range trading methodology that came out of that, all right? And the methodology is fairly simple. And let me preface this. When you think about value, don't overcomplicate it, all right? Don't overcomplicate value and value range trading. And let me explain that every one of you out there is an expert value trader at something, okay? You might be into, 57 Chevys, all right? And you know that market inside and out. When you know what it means when a price for a 57 Chevy comes up compared to, because you've seen so many of them. My mom had 11 kids. She was a great value trader at loaves of bread and gallons of milk. I mean, she just knew when someplace went on special with loaves of bread at X price that she was buying a freezer full. It's kind of like that. Value range is where the 70% of the volume traded, right? And that's going to give you the value range. So with that, there's really three trading setups that happen every day, all right, every day. And that is the market can open, which I'm saying that it just did here in Bitcoin, right? The market can open in only one of three places. It can open in the value range, it can open above the value range, or it can open below the value range. And with those three different openings comes the methodology. All right, so a market that opens in value, we're going to talk about it kind of like a physics equation. Something that's in value tends to stay in value, right? You're going to say it opens in value, then I don't really have an opinion unless it gets to one end or the other of the value range, all right? So if it opens in value, then I would want to buy at the low end of value and sell at the high end of value until something in the market changes to push it outside that value range. It's a real simple concept. Back to the 57 Chevy. Let's say they're trading, the value range was $10,383. Well, you know, if one comes up on auction around there, you're a buyer and you're a seller of that car somewhere around 10,700. I'll do it all day long. I'll flip them back and forth. Don't overcomplicate it. That's kind of what it is. It's like that. Another scenario is it can open above or below value. So let's look at it right now. Bitcoin trading 10,367. It's below the value range. Something in the market has changed, right? And in this scenario, when it goes and tests that low end of value, you want to be a seller there. And you expect the market then to make a new distribution lower. Now, your risk is that value range in a nutshell. And the concept was that if it opened below value and then traded into value and spent at least two time brackets, which were 15-minute time brackets back then, it had an 80% chance to cover 80% of the value range. Now, that is really important on how big that value range is then, because, you know, in this case, $1,000 or $2,000 value range, if you're day trading it, is a lot different than a $300 or $400 value range, a $400 like we have today. So that analysis, that risk analysis comes into play. Some people would just wait and be patient and not sell against that value range low and see if you could get penetration into the value range, build some time and volume, and then they'd be on it for that 80% chance that it's going to cover the value range. The same trade setup happens when the market opens above the value range high. So it opens above 10,783. You'd be a buyer against there and look for a redistribution higher. If it trades into value and builds time and volume, you got an 80% chance for it to cover 80% of that value range. That's it. It's kind of a simple gauge right away in the market to decide if something's changed or if something hasn't changed. And you're going to see tomorrow when I talk about pivot trading, how important knowing what the value range is in relation to the pivot makes you a much better trader than either one of those by themselves. All right, that's value range trading in a nutshell. KISS, baby. Keep it stupid simple, or keep it simple stupid, one of those two. But it's an easy methodology to build some rules around, and how big that value range is really important in your risk analysis on when the market opens above or below value. Just keep that in mind. When the market opens above or below value, how big that value range is a real key ingredient to risk associated with that value range, and or the reward associated with an 80% rule that we used to call it on the floor, an 80% rule that this market's going to cover 80% of its value from the previous day. All right, I hope that clarifies the way, well, I'm clear on the way value range trading works. I hope it helps you also clarify what that VRH and VRL are on the sheet. Again, you keep arming yourself with knowledge and discipline, man. I can't say that enough. You just keep arming yourself with knowledge and discipline around trading, and you're going to be a more successful trader. All right, you got to cut the emotion out of it. Stick to the rules that you've made for yourself and you will be a more successful trader. Until tomorrow, you guys have a great trading day. If you have any questions, you can put them in the chat here, and I will get to any questions that you have. Have a great day.